You're listening to the Practical Wealth Show with Curtis May, putting you in the driver's seat to control your finances. Let's start the Practical Wealth Talk about alternatives to Wall Street.
All right. Welcome to the Practical Wealth Show. This is your host, Curtis May. So I want to do a brief episode. I just kind of want to talk about today. So I'm going to tell a story of a client situation I had because I think it would be instructional to some of you listeners out there. And then we're going to talk about the problems. You know, does typical financial advice kind of feed the problem or solve the problems that you face in the future? And, a mentor, actually it was Nelson Nash, who wrote the great book, Become Your Own Banker, and the leader of the Nelson Nash Institute, told me one time I was at his workshop, his 10-hour workshop, okay? And I realized how much I didn't understand about the concept. I've been through that thing twice. But one of the things that he said, son, if you know what's going on, you'll know what to do. And, too many people, especially a lot of people I serve in the African American community, just don't know what's going on. They don't understand that, I've had over the over the Christmas break, various stories about, I don't know about capitalism. And I was like, what? I went into it on Sunday. I had a couple of glasses of wine. So now I'm kind of lit and, not holding my tongue, and I let somebody have it. I was like, are you crazy? And, because that is capitalism is a F.A. Hayek describes it as an ever expanding system of cooperation among strangers. Okay. And, it is about trading value. So if you focus on serving your fellow man and creating value in the marketplace, because your income is in direct proportion to the value that you bring to the marketplace, right? So if you can you create more value? Can you make yourself more valuable? You can't, rip people off in a, or there's no such thing as a monopoly. I was watching something on TV. Most monopolies are created because of government. Because if somebody's doing well and all of a sudden they try to suppress competition and try to take control of the market, what'll happen? Some competitor will come out, figure out a way to do it better, and break that whole thing up. And so, you got to trust the system and innovate. So you want to be able to be in control, be creative. The tax code we're talking about, is business friendly. So be in business. Okay. That is the answer, be able to be in control. I always tell people, in my mind, a job is risky because you can get fired for one of two reasons, any reason or no reason at all. But let me go back to, before I get too much into that, I want to kind of keep this a short episode. But basically, I was talking with a client of ours, and this person was, having some challenges with a real estate transaction, and it has been going on for a while, and they're stuck in dealing with this situation. And one of the things that I focus on, I referred him back to last week's show because, see, one of the things is that you can't get bogged down in the short-term thinking. So one of the things after having that and saying, listen, at some point you got to let it go. If you got to let it go, you got to make a decision. So I shared with him, I don't know if I mentioned before. So my family was in the tavern business, and, my dad was shot when somebody tried to rob our bar, and he, I ended up having to take over the business now I literally could not step foot in the place where it happened for about 2 years. By the time I stepped in, it was a mess, and I had a crash course in, portion control and boxes of unopened tax bills. And, I tell people I have gray hair now. That's where the gray hair came from, being stressed out, scared to death, knowing you could get robbed at gunpoint, just expecting your business is going to get robbed at gunpoint 3 times a year. Okay. So I come from a brick and mortar world, family growing up in supermarket business, in retail. And so, one of the things is that when I was in that, I've always learned to take the long view and keep counsel. So, I had a cousin that was very successful, with still is actually with a commercial detailing business, and I would go see him, not to ask for help or for favor. I would go and look. Can we have coffee? Let's have lunch. And I just needed to talk. I needed to have somebody that had more insight than me, that had more experience. That was, I had $1,000 a week payroll. He had a $10,000 a week payroll. So he wished he had my problem. Right. And so sometimes you got to get around. This is the power of, that was a little mastermind, but that was the power of seeking counsel so that you can think your way out of problems. Right. And so with my friend and client, I was like, listen, where are you're stuck in the moment. And so as long as you stay stuck in that moment, you can't move forward. Okay. And so if it's over, you got to let it go. And, and so I challenged him. I said, listen, I called him yesterday. I said, listen, what are you doing this week? What is your plan this week to grow your revenue? This person had a business, so how many properties are you looking at? You've got to get yourself into activity. What is your goal to, like my real estate clients, I challenge them, what is your goal to grow your passive income every quarter? Because that which gets measured gets done. And so one of the things, I remember I went sailing a couple of years ago, and on this lake, and it was one of those, it wasn't a catamaran, it has the one with the 3 things. I forget what to call it, but it was more stable. So I like that one better. And one of the things he said, and I mentioned this, I said, listen, you have to pick a point on the horizon. So he pointed to this, at the shore. Pick a point on the horizon and aim for that. Now you're going to have to tack back and forth with the wind, but you've got to pick a point. Now, I don't know if this works when you're in the ocean because you can't see nothing, but you've got to pick a point where you want to go. So one of the things I try to focus clients on, and what you have to do is you've got to focus on taking a longer view, and you've got to pick a point. One of the things I ask my clients is that if we were having this discussion, let's say 24 to 36 months from now, what has to happen in your life, personally, professionally, and financially, in order for you to feel good about your progress, right? So I want you to look forward of what it's going to look like, what it's going to feel like, where are you trying to go? And I want you to hold on to that. And then you've got to work backwards to create the action plans, right? So when you look at last week's message, I said, listen, where do you want to be at December? And then break that down into quarterly goals. So I literally tried to focus this individual, and I call him again this morning. Okay, what'd you do? By 10 o'clock tonight, I want you to write out the 10 things or 5 things you need to do by 10 a.m., the most productive things you need to do to drive your business forward. It's really about 2 or 3, but if you've got a problem and you got a lawyer and you've got some stuff to deal with this property, okay, well, that's not an all day thing. You know what I mean? You have to, that's a call to this person. That's a call to that person. Okay. That's 20 minutes. It's over. What are you going to do with the rest of your day? And, sometimes when you're, and I want you to think about this, because see, who can you help as you're listening to this that need encouraged? So you can sit there and wallow in self-pity, or you can let people wallow in self-pity, or you can challenge them. So don't tell me that, because I'm going to ask you, okay, what you going to do about it? Because you can sit there, you're depressed, you move a muscle, change your mood. So you got to get up and get into action. Now, it doesn't help that because I have a joke that I went to the John Shaft School of Sensitivity. All right. So if you ever, I'm a I'm a 70s child, right? So I grew up watching Shaft. So it's like, okay, would Shaft cry? No, then, probably nobody would see me cry since I was 6 or something. But the, so I always have that, insensitive, but I'm clear, so what I want to do is all right, let's solve this problem. Let's get you moving forward. So one of the things I want to challenge you folks, if you're stuck in something, where do you want to go? 'Cause there's always light at the end of the tunnel, and you have to get yourself in motion every day to move towards your goals. Okay. So that was a little aside. So I wanted you to, I was thinking about that. And then, you have the ability, if you're listening to this, to be a positive influence in somebody's life, so that you want to try that, you want to encourage them, so one of the things that I was sharing with people, you need to mash them on. If you're in business, business is a very lonely profession, because if you talk to people with jobs, they don't even understand what the hell you're talking about. It's kind of like, speaking to somebody in Spanish, because you're thinking about, okay, how can I, go 10x my business, and how can I get a 2% raise? Or it's just a different conversation. And, and I told people, look, when you go into business, it is I live in the performance economy, right? I don't live in a trade hours for dollars economy. I've got to make stuff happen every day, or there's no check waiting for me on Friday. And so, but that's the entrepreneurial decision that you have to make. And, I've heard Dan Sullivan say from Strategic Coach, entrepreneurship is a life sentence. Once you do it, it's really hard to go back, right? So anyway, so that's the first part of this. So let me kind of end this conversation. I'm going to switch gears here, which is, I went too long on that, but this is what I want to talk about. So one of the things is that, because I've been hearing this, so I've had two different rants. I know a rant on capitalism and a rant on, just, working through your problems. But what I wanted to, so that the title of the show is, does traditional financial planning feed the problem or solve the problem? So as you know, I'm a big proponent of prosperity economics. And one of the things I was thinking, and I kind of got some of his thoughts from Lynn Ranier at the Wealth and Wisdom Institute. And the reality, see, one of the things is that what I'm finding with people, you don't even really, really understand the problem. Okay. And so here are the problems that people have, that I don't care what you do, you've got to deal with this. And so the problem has 5 elements. So risk, taxes, penalties, inflation, and depreciation, right? And see, so I'm going to break these down for a second. See, risk is, the risk you feel you have to take to try to get ahead financially. Because most people think the key to growing their money is to look for better investments that pay a higher rate of return. But how do you get a higher rate of return? You've got to take more risk. And people think, oh, that's all right, I have no risk, no reward. In my mind, risk means probability of loss. See, Wall Street got you brainwashing and thinking that, oh, yeah, you got to take risk. And, you got to take some risk. You got to gamble. An investment is, according to Benjamin Graham, is something you put your money into where your principal is safe and you have a reasonable opportunity to make a profit. He says anything, and this is Warren Buffett's mentor, Benjamin Graham. He says anything other than that is speculation, i.e. gambling. Okay. So now if you hold that definition up to what most people are doing with their retirement plans and in mutual funds and 401ks, I would dare say you're not investing for retirement. You think you're saving for retirement, but you're really investing. And I would argue, I think you could make an argument that you're not even investing for retirement. You're speculating. Don't speculate with more than you are willing to lose, right? And so what's the other risk? So let's talk about taxes. See, the taxes is the money you give away. See, most people transfer. Taxes is the number one wealth transfer. Most people transfer the majority of their wealth away to people that create the situations, control the outcome so that they profit off of us not really understanding the game that we're playing. Okay. So taxes are huge. Penalties, the rules and regulations that, the government creates that impact your money. Inflation, the cost of goods and services are increasing. So think about this. You're saving all this money, but it's a moving target because you're saving. We have flexible currency, right? And so now and I put this on a Facebook, or I think a video out that sent out to my list, where Yellen was telling how bad it was that you know they're terrified of deflation. And I was like, how can falling prices be bad? That my dollar buys more, okay? Where you have a goal of destroying my purchasing power by 2% a year as your stated goal, all right? So that means they're trying to make, so let's take the rule of 72. So if you take your interest rate divided in 72, it tells you how long it takes your money to double. Well, you can use that for the cost of living, right? So if your inflation is more than 2% for real inflation, but let's say if it's 2%, 2 goes in 72. Let me see. If 3 goes in 72, let's say it's 3%, 24 times. So that means every 24 years, the cost of living doubles. If inflation is growing at 6%, which is really the truer number, that means your money doubles every 12 years. So that means every 12 years you got to make. So if you're making 50,000, it means in 12 years you got to make 100,000 just to buy the same amount of groceries. So if you're making inflation's at 3% and you're making 50 grand, that means when you retire, you need, let's say 24 years from now, you need 100 grand. Or let's say you're already in retirement and you're still alive 24 years later, right? You need 100,000 to buy what 50,000 bought when you're retiring. And, as Dr. Phil would say, how's that working out for you? Okay. Depreciation, which is the value of the future buying power of your money. And so that is going down. So you have a market that goes up and down. You've got flexible currency, right? It's depreciating. And so now, you've got risks, you've got taxes, you've got penalties, you've got inflation, you've got depreciation. So now when you look at these problems, the financial industry gives you product solutions, right? But how does typical advice, think about this. How does typical advice of you need to balance your portfolio, max out your retirement plan, get you a balanced portfolio of mutual funds, buying financial and bank products, mortgages, buy term investor difference, accelerating your mortgage. Do those concepts help you solve the problem of risk, taxes, penalties, inflation, and depreciation? See, sometimes they because there's problems inherent in the products because they don't take account those things, and so the performance of those things aren't adjusted to deal with those things, meaning the products, to deal with those risks. Okay, and so you have to think. See, products are just tools, right? And so you need to have a philosophy. So when we go back, we teach principles, the 7 principles of prosperity, the 7 cures for a lean purse. You want to teach principles. And then once you have a system, an overriding system of how you, and a philosophy of how you deal with money, you're not running trick plays. You're not running, for the product du jour, right? That somebody wants to sell you. You have to know, okay, look, here is what I'm trying to achieve. So if you want to become financially independent, that is a function of cash flow. right? And so, because you can't eat net worth. So people are speculating, hoping their money goes up. Well, Bitcoin will go up until it doesn't. Okay. Stock market will go up until it doesn't. So what if you still own it the day after it goes down? Well, who's on the other side of that trade that wants to buy it from you? And so you have to be balanced. And, I look at it and say, okay, look, if this happens, then what do I do? How do I protect myself? How do I play defense? So, I challenge people to have a holistic view of their money. And so that starts with, what do I say that it was the best thing to invest in? Your best investment is you in between your two ears. So in your mindset, one of the things I started saying, I'm sending out to our list. So if you're on our list, you're going to start getting a Jim Rome a week from me or Bob Proctor. So I'm going to start to, work on your attitudes, right? Work on your knowledge. I sent one out and I told people on my newsletter this morning to, hey, this is a great one. It was about a 14-minute lesson, but get your pen and paper. So if you're listening to this, get somewhere else. If you're at the stair, if you're listening to this, get a notepad and take some notes, put it in a journal so you can go back and study this and get the lesson, because, a changed viewpoint can really change your life. Okay. And so I just kind of wanted to challenge you. So what you should get out of this is, okay, well, Curtis, what should I be doing? And so I didn't have time to go into that today, but I'm creating a e-course called Essential Lessons. And so if you, I'm going to put a show notes into, I think the starting point is understanding the demographics and what's going to happen over the next 10 years. So if you start to understand the problems, then what happens is now you can start to protect yourself. Because think about this. This is from Lynn Renier's book, Essential Lessons. The government problem is they need more revenue. Revenue is a code word for taxes, right? But the problem is they need more revenue from a declining workforce, an aging population, and citizens that have an inability to save and invest for their own futures. And the government is in direct control of those problems. What are the problems? Risk, taxes, penalties, inflation, and depreciation. And the only source of revenue it has is to collect taxes and print money. Both of these create problems for us. If printing money is inflation. It's inflation. The true definition of inflation is increasing the money supply. And when you have more dollars chasing the same goods, what you perceive as higher prices is really the value of the dollar depreciating because it won't buy as much stuff. And so what happens is you don't even really understand a lot of times the nature of the problem. See, if you can't identify the problem, you don't know how to solve it. And so the problem is our money. Okay. The money is the problem. So how do you deal with that? How do you protect yourself? So if you understand that the two defining moments that we teach, well, first one, because of inflation, your money will never be worth more than it is today. So if you understand that, because I have people today, that I'm still trying to get this mortgage thing. I said, listen, if your dollar is more valuable today, don't you think the bank knows that? So that's why they give you a lower interest rate on a 15-year mortgage, because they want you to think, oh, well, you need to get rid of this mortgage because you're going to pay all this money in interest. So that's what they want you to think. Okay. What really is happening is when you pay money back earlier, you're creating velocity for them. So you're giving up money under your control, giving it back to the bank so they can loan it back out. Whereas what you want to do, if you understand that because of inflation, your money will never be worth more than it is today. And if you go back on the mortgage episode that we recorded, you want to keep your more valuables today dollars in your pocket, earning money for you, and stretch out those payments, because the longer you have it, because of inflation, you're paying back dollars that are worth less and less and less. So I would pay them back over long periods of time with their funny money, and I would use my money, and this is what I do. I'm buying, to buy real assets that generate cash flow, and as opposed to giving my money away, because folks, you can be out of debt and broke. Equity inside of a house has no rate of return. So I'm not going there again. But I've just had this talk with somebody. I'm just trying to get through through them. A couple people, really. And so that and the capitalism things. I'm going to do another episode on that one because that's another pet peeve of mine. And but listen, it's the beginning of the year. I want you to come out intentional with a plan to save even more, to create even more success. So you've got to think about it. You got to focus on what you want. You've got to figure out how to make each day count, and so, you want to set your goals. You want to set business goals and you want to set investment goals. See, they're separate. Okay. What are your family goals? So I'm going to hit the goal thing hard because you get what you focus on. And so you have to make the life you want happen. So with that, folks, I'm out. And so I want you to get out there. I want you to take control of your life. Make it a great day. This is Curtis May from the Practical Wealth Show, and we are out.
Thanks for listening to Practical Wealth. To access the show notes and resources, go to practicalwealthshow.com. To get your questions on the show, go to practicalwealthshow.com. This show is for entertainment purposes only. Before you make any investment decisions, consult a professional. This show is copyrighted by Practical Wealth. Written permission must be granted before syndication or rebroadcasting.